Hello and welcome. You're watching ET Markets. I'm Tanya Aneja and I have with me a very special guest today. We have with us Mr. Sudip Bandyopadhyay, Group Chairman, Inditrade Capital. Thank you so much, Mr. Bandyopadhyay, for joining us on ET Markets.
Thank you, Tanya.
Mr. Bandyopadhyay, markets were well prepared for the rate hikes amid high inflation and already factored in a rate hike of 50 basis points. But the good news is that there was no shocker this time around. So your thoughts on the monetary policy?
Well, I think it was a very balanced policy, taken out by the MPC and the governor. Yes, absolutely right. Everybody was expecting a rate hike. And in fact, the governor in an earlier interview had hinted also that, rate hike is a no-brainer. That's what were his exact words. So we were all pretty much prepared for a rate hike. What was good is that they didn't touch the CRR. And that's what helped the market to a great extent. And if you see the bank stocks rallying, that was on the back of CRR not being touched. Because if the CRR had also been moved up, I think that would have constrained the banks. And that's the reason we have seen the banks rally. The other good part which they did is that they didn't forget the growth aspect of the economy. And to the extent possible, they tried to stimulate the housing demand by permitting multiple types of cooperative banks, urban cooperative banks, state level cooperative banks, and other categories of cooperative banks to A, increase the housing loan limits, and B, permit construction financing of residential properties to the builders. So commercial loans can be given to builders for financing of residential properties. Now, this should create a positive momentum in the economy, particularly in the semi-urban and urban, rural India, where these cooperative banks have a good hold and a good client base. Housing stimulates demand in multiple other sectors like employment, cement, other building materials. So I think it's a good thing to do under the circumstances. They can't obviously, have some other policy whereby liquidity is injected at this stage, considering they are battling a significantly high level of inflation. But under the circumstances, this was a very good step, and that's what the market is cheering.
Okay. And also, how many rate hikes will the RBI undertake going forward, according to you?
Well, I think that's the tricky part, Tanya. You see, the RBI governor talked about a inflation of around 6.7%, average inflation for the year. Now, that has got two assumptions which he underlined. One is normal monsoon. The second is oil prices being at $105 per barrel of Brent. Now, both these are, big question marks at this point in time. Monsoon, maybe, if we believe the IMD forecast, probably will have a good monsoon, and that should take care of one part of the equation. But oil prices at 105, yes, it helps us. Yes, it helps Indian economy. Yes, it brings down inflation. But is it likely to happen? I think it's anybody's guess. And that's the reason I think we have to wait and watch. In fact, RBI governor also mentioned something to that effect, that they will be watching this scenario and they will have to take a call based on where things are. If you look at the breakup of the inflation, which he outlined, the last quarter, the inflation is expected to come below 6%. Before that, it's going to remain above 6%, which is the tolerance limit for RBI as per their mandate. So it's a very tricky situation at this stage. They have to calibrate and they have to keep watching the situation. I am confident that MPC will continue to do that, but how many hikes? Very difficult to tell at this stage.
Okay. And also, Mr. Bandyopadhyay, what is your view on markets in the short to medium term? I mean, it's a tug of war that is happening between bulls and bears, and the undertone of the market continues to remain negative. So what is your view?
Well, Tanya, what's happening is, there is a general risk aversion amongst global investors. If you start looking from the month of January, which is the beginning of this calendar year, every month consistently, Jan, Feb, March, April, and May, 5 months, they have sold 40,000 crore plus stocks in Indian market. So it's more than 2 lakh crore worth of stocks have been sold by FIIs. Now, Indian market have kind of absorbed that, but yes, the levels have corrected. They have corrected to the extent of 15% roughly from the top. And I think there is still selling pressure on a regular basis. If you see the US market, whether you're looking at NASDAQ or the Dow, there also has been significant correction. NASDAQ correction has been close to 30%. Dow also has corrected significantly. So at this stage, I think everybody is battling inflation and trying to reduce the liquidity so that we don't get into a situation where inflation becomes absolutely a menace. Now, controlling inflation will depend on multiple factors, as we alluded to. One of the being most important is Russia-Ukraine war, which is creating pressure, significant supply side pressure, whether on the the oil, gas, or even agri commodities, for which Ukraine and Russia has been the breadbasket of the world. So there is significant pressure on prices, which is stoking inflation all around. So you have, on the one hand, significant liquidity injected by central banks over the last 2 years. On the other hand, there is a terrible supply shortage. Now, these two are a combustible combination, and that's leading to this kind of inflation.
Okay, talking about FII's outflow only, what is pushing FIIs away from India? And given that domestic equity valuations are now more reasonable, do you feel that the pace of FII selling could ease?
Well, a couple of things, Tanya. One is, FIIs operate in the global markets, operate in multiple markets. India is one of the markets. Yeah. And when interest rates start going up in their home country, which is US in most of the cases, they will obviously weigh the risk of investing in an emerging market in securities which are of uncertain return. If they're getting a certain return of a certain percentage in their home market, by investing in bonds or government securities, they will definitely like to do that rather than investing in emerging markets like India. So that is propelling them. The second thing, to your point, yes, Indian equities have corrected, as I was mentioning, about 15% from top, but there are still, valuation-wise, Indian equities are still one of the most expensive in Southeast Asia. Leave aside Japan, they are much more expensive compared to China also. And this is creating pressure on Indian equities. And I think this mechanism of correction or catching up of the earnings should continue. Now, unfortunately, the cost push, which we have been seeing in India, will lead to margin erosion for Indian companies, which may lead to derating of Indian companies also. So we'll have to wait and watch the scenario very, very carefully. On one hand, we expect the time correction, which is over a period of time, few months, the PEs will catch up with earnings going up. Now, will the earnings go up? That's a big question mark, considering that the cost push which Indian companies are seeing.
Absolutely. And before we let you go, which are the sectors that could relatively be safe bets in a rising interest rate scenario?
Well, I think BFSI has been our, one bet which we have been positive on. Today's credit policy, I think, kind of reconfirmed that. So we have been recommending investors to buy, frontline large cap banks, SBI, ICICI, and the likes, if they have 1 year plus time horizon. Normally, in a rising interest rate scenario, strong banks and finance companies gain. Their margin improves because there is a lead lag between the time they pass on the benefit of higher interest rate to their deposit holders, and when they start charging higher interest, that helps them. The other sector which we are bullish on is defense manufacturing. I think the geopolitical scenario today it makes it absolutely necessary for countries to focus on domestic manufacturing of defense equipments. Now, India has a clutch of well-run PSU defense companies, whether it's a Mazagon Dock, whether it's a Bharat Dynamics, whether it's Bharat Electronics. They are very well-run companies with a lot of cash in the balance sheet and full order book, and mostly cost plus structure of their contracts. So I think it's a great combination in an inflationary and uncertain situation.
Okay, well said. On that note, Mr. Bandyopadhyay, thank you so much for talking with us and sharing your valuable thoughts. Thank you very much.